Welcome back to the Digital Asset Report. Bitcoin has risen 5% from Friday's brutal sell-off, bringing the rest of the market up with it. The rebound comes after a turbulent week of liquidations and market volatility. It's the end of Q3, so let's dive into the news that's setting the tone for the rest of the year. Wall Street is taking the lead in Bitcoin options. BlackRock's iShares Bitcoin Trust has now overtaken Coinbase's Deribit to become the world's largest venue for Bitcoin options. Open interest hit nearly $38 billion compared with $32 billion on Deribit. The shift highlights how U.S. regulated venues are gaining ground over offshore platforms that once dominated crypto derivatives. October is shaping up to be ETF month. The SEC faces final deadlines on 16 crypto ETF applications tied to assets like Solana, XRP, Litecoin, and even Dogecoin. Analysts say approvals could trigger the next leg of the altcoin rally. Nate Garachi of Nova DS Wealth Management called it an enormous next few weeks for spot crypto ETFs, and he's not wrong. Meanwhile, Vanguard is reportedly preparing to let its brokerage clients access crypto ETFs. The $10 trillion mutual fund giant has long avoided digital assets, but strong client demand and shifting regulation are forcing a rethink. CEO Salim Ramji, who once ran BlackRock's ETF business, isn't planning to launch Vanguard-branded products, but may open the door to third-party funds. Policy is also in the spotlight right now. Regulators are probing suspicious trading ahead of crypto treasury announcements. The SEC and FINRA are investigating whether companies or insiders violated Regulation Fair Disclosure by tipping traders off before large Bitcoin purchases were made public. The scrutiny comes as crypto treasuries modeled on Michael Saylor's company Strategy attract billions in new capital. And in New York, Adrian Harris is stepping down after 4 years of leading the Department of Financial Services. Harris built the state's virtual currency unit, issued stablecoin guidance, and brought enforcement actions against Gemini, Genesis, and Robinhood. She will be succeeded on an interim basis by Caitlin Askro, a former Federal Reserve official. At the SEC-CFTC Joint Roundtable, Chairman Paul Atkins called crypto job number one. He said both agencies must move in lockstep to oversee digital assets, ending years of turf wars. Acting CFTC Chair Carolyn Pham echoed this sentiment, declaring the turf war is over. Atkins was also pressed on wallet rules as tokenized securities moved on-chain. He remained vague on whether wallets might require legal identification, a decision that could have sweeping implications for Bitcoin and self-custody. Much depends on Congress, where the Clarity Act is still under debate. And today, Atkins declared the event a turning point in the history of American financial markets.
Today, I believe, marks a turning point in the history of American financial markets. For too long, the SEC and the CFTC have operated in parallel lanes, too often in conflict with each other, leaving the American public to bear the costs of duplication, delay, and uncertainty. That era is behind us. We are charting a new course, one that will solidify America's position as the world's financial leader.
Finally, on-chain data shows another Bitcoin whale awakening. An address dormant since 2013 moved 400 BTC worth over $44 million this week. It's the latest in a series of Satoshi-era wallets springing back to life as Bitcoin trades comfortably above 100,000. Analysts say such moves often spark market speculation, but sentiment remains bullish, with prediction markets favoring a push to 125K soon. That's it for today. If you enjoyed this video, be sure to give us a like and a follow for more.